Hello, good afternoon. You've tuned into Your Stocks coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much for tuning in as always. In terms of the markets, they've inched up again to the day's highest point. As of now, 25,078 is what the Nifty is trading at. So a good day coming in there. 7/10 to 0.8% of gains is what we're seeing coming in for the Nifty 50. Broader end of the market, that's also managing to hold on to decent gains in today's trading session. When you look at it, the Nifty mid-cap, that's managing to hold on to gains of 0.6%, while small cap is just mild gains of 0.1% as of now. So when you look at that advanced decline ratio, that's still in the favor of declines versus advances that we're seeing coming in, because we have main performance that is coming in today is from the Nifty Bank that is managing to hold on to good gains, while small cap is not doing as well as the benchmark indices. So that is what we'll be keeping an eye out on. In terms of overall the movers, today Nifty IT in terms of a sector is managing to hold on to very good gains, and among the top sectoral gainer is the Nifty IT. Keep an eye out all the hospital names as well. We have a lot of news flow coming in there, so keep an eye out on that. But on that note, let's get started with the show. And this is the show where we solve all your stock-related queries. And to do just that, we have Parthiv, Shah, Director at Tracom Stock Brokers, as well as Ashish Kyal, Chartered Market Technician, author at Wave Strategy Advisors, to answer all those stock-related queries. Parthiv as well as Ashish, good afternoon and thank you so much for joining us on the show. Let's get started with those queries. The first query for today, we have Vivek Mehta, who's writing to us from Mumbai. He's holding 15 shares of Kalyan Jewellers. This is at a price of 723 rupees per share, as well as 5 shares of NHPC. This is at a price of 111 rupees per share. Wants to know the future prospects of his investments. Parthiv, what's your view? Kalyan Jewellers as well as NHPC, he's making a loss on both these stocks right now. What should they be doing?
Good afternoon, Vinny, Ashish, and our viewers. See, I think we are not very upbeat on Kalyan Jewels at these levels. No doubt, the company gave the update, business operational update, in terms of showing growth of almost 30%. But I think the stock had run up way too high. Unfortunately, the gentleman has purchased at very elevated valuations, post which the stock has almost corrected by 30%. And even here, on a trail multiple of 65, we are not very upbeat on this counter because our sense is that other peers like, say, Titan, whose 85% of the revenue comes from the jewelry segment, are making huge inroads and garnering more market share. No doubt, I think the business sentiment going ahead, even the management of Titan has mentioned they are a little cautiously optimistic, but we are upbeat on the fact that the consumer sentiment is slightly changing for the good, and we are also heading for the seasonally strong season for these players, especially the H2, where we'll have a lot of weddings and things like that, which a lot of shopping and there's a lot of pent-up demand. So I think it's better to convert or switch into Titan vis-a-vis holding Kalyan Jewels.
And NHPC, do you have any view?
Yes. So basically, again, I think we are not like advocating any power generating companies which are generating power through only one source of renewable energy, which is like hydro. Because sometimes if the monsoons are not to the favor, I think the operational efficiency of these hydro projects tend to really be very lean. So this is not the counter would suggest. We rather prefer NTPC, has a fantastic thermal asset. It's also making huge inroads in renewable, and it's a well-diversified power player in terms of utility space versus NHPC.
Okay. Keep an eye out on those names over there. Prefers Titan over Kalyan, that's a view there, and NTPC over NHPC. Ashish, your view, Kalyan Jewellers as well as NHPC. Do you think the viewer can make up for that some bit of a loss that they're making in both these stocks and then look to switch?
Hi, afternoon to you and all the viewers. If you look at Kalyan Jewellers, his buy price is pretty elevated at 711 and the stock is around 484 right now. But there is no sign of positive reversal. If you look at the chart, the stock is managing to bounce back from that 450 levels, and possibly I would suggest that exit from the stock if it reaches around 530. So maintain 450 as the stop loss, 530 can be the exit level. And I agree with Parthiv on Titan being a better bet than staying long on Kalyan Jewellers. As far as NHPC is concerned, the stock has continued to consolidate for quite some time. I think it's forming a triangle pattern, and very strong consolidation we can clearly see since 2024 February onwards. And on the upside, the stock needs to break that 89 mark, which has been a major hurdle. Once it breaks 89 mark, we can have a triangle target on the upside, which is going to be around 110 levels. So the overall undertone for NHPC is sideways. Break above 89 can take it towards 110 levels. For now, maintain a stop loss for the stock at around 82.
Okay, keep an eye out on those levels over there. Let's move on then, talk about REC. That's the next query we have coming in on. Nikhil Gupta, who's writing to us from Noida, he's holding 150 shares of REC. The price is 605 rupees per share. He's asking if he should continue to hold or sell at the current levels. Buy price 605, currently 377. Your view on this one, Parthiv? 605 is the buy price for REC. What should they be doing?
I think, again, the concern here is that the gentleman has bought at very, very elevated valuations. Because even currently, if I look into the valuations, they are at a trail multiple of 1.26 price to book multiple. And the levels at which he's invested, REC was quoting at almost 2.5. And a lot of government PSUs, especially in the NPC space, and that too catering to the power vertical, I think they don't tend to get very rich valuations. No doubt, I think in terms of the business performance, REC has been firing on all cylinders. Management has guided for a 12% disbursement growth this year, FY26. And in Q1, they disbursed sanctioned almost 1 lakh crore worth of loans, which was like 3 lakh crores for the entire FY25. So business momentum is good. They're focusing on the renewable project portfolio. Distribution is again 45% of the sanctions. Overall, things are looking good. But again, my concern is that, the levels at which the gentleman has bought, I think it will take at least 2 to 3 years for the book to grow to the size to justify those valuations. So it will be a long haul, and I would not even suggest cost averaging at these levels.
Okay, you wouldn't even suggest cost averaging at these levels right now. Okay, Ashish, your view for REC, what should the viewer do? Like, when Parthiv said these are those very high levels. I think it's one of the highest levels that the stock has seen, 605. So what should they do?
Yes, absolutely, because that is the entry level is pretty high that we can clearly see on the charts. And right now, the stock has a very important support of 350, where it's showing some kind of a possibility of a bounce back. But better to be out from the stock. It has been underperformer for quite some time, and it has broken all the major supports of 400 level also. So my suggestion would be any pullback towards the level of 390. Use that as an opportunity to be out from here. And on the downside, 366 is the important stop loss.
Okay, keep an eye out on the stop loss levels as well. That's important to keep an eye out on. Let's move on to the next query then. We have Jagan Mohan, who's writing to us from Chennai. He's holding 35 shares of Tata Steel. This is at a price of 155 rupees. Wants to know the long-term view for the stock. Parthiv?
One thing is very clear. The Tata Steel management realizes that it is going to be the Indian operations going ahead, which will generate the best EBITDA by ton and best growth for them, because a lot of these operations have a lot of linkages in terms of backward integration of cooking coal and also iron ore. And even the cost structures for the European division are not kind at all getting friendly. And I think they're bleeding in some of the geographies there, and they're trying to cut the losses, but I think it's going to be a very long haul there. So they are expanding big time in the Indian subcontinent, and more importantly, the Kalyan plant, which will be adding another 5 million tons per annum. I think that is going to be the flagship plant for the company, which will generate one of the finest EBITDA by ton. So if the gentleman has a long-term view, I believe that the Tata Steel management is making all the right moves. And once India becomes the dominant share of the overall consolidated capacity of Tata Steel, I think probably the markets will not worry about the European operations bleeding. So overall, I think Tata Steel looks very good for the long term. No doubt, Q2 could be a little subdued because of lower realizations to the tune of 2,000 per ton. But over a 3 to 5 horizon, I think Tata Steel looks good.
Okay, that's a view coming in there from Parthiv on Tata Steel. Ashish, your view for Tata Steel, what should they do? They bought it at 155.
See, the entry level is decent enough, and the stock is nearing its 52-week high. If you look at the chart, the 52-week high has been around 177, and the stock is still quoting at 170. So that shows an outperformance. Overall undertone for Tata Steel is bullish. We can clearly see the metal sector and the metal stocks has been doing well. So one can look forward to hold on over here, or maybe fresh entry is also recommended for the targets on the upside at around 220. And on the downside, one can maintain a stop loss of around 159 from a long-term perspective.
Okay, keeping an eye out on those levels over there for Tata Steel. But on that note, we're going to slip into a very short break, viewers. Don't go anywhere. We'll be back with more of the stock-related queries after the break. Welcome back to Your Stocks in CNBC-TV18. We still have with us Parthiv Shah of Tracom Stock Brokers as well as Ashish Kyal of Wave Strategy Advisors to answer all the stock-related queries. Let's move on to the next query then, gentlemen. We have Umesh Sharma, who's writing to us from Jaipur. He's holding 21 shares of RVNL. This is at a price of 629 rupees per share. So clearly, they're making a loss on this one. Now, he wants to know whether to hold or sell at the current levels. Parthiv, what's your view coming in for RVNL? You know, just last few weeks back when you saw, we had seen some run-up coming on for these railway stocks as well. But from their buy price, it's a clear reduction in terms of the price or the fall that they've seen. What should they do?
Even here, unfortunately, the gentleman has purchased at almost the peak valuations and the peak, rather I would say the peak frenzy of the railway stocks. Because RVNL at around 629. In fact, today RVNL is quoting at a 60 trade multiple in terms of valuation, which is lot richer than a mighty conglomerate like L&T as well. And the price at which the gentleman has entered makes the valuation multiple even more absurd. I think there's nothing wrong with the business momentum in terms of the government's intention to spend massively in the railway, and RVNL being one of the dominant players in terms of garnering a lot of railway-related projects, both in terms of EPC and also in terms of consultancy. But the concern is valuations. I think at such absurd valuations, I think it is very difficult to recoup the original capital. I would any day prefer to park my capital into a company like Larsen & Toubro, which is at current stage, quoting at a lot reasonable valuations vis-a-vis such peers. And more importantly, I think at having a 5.8 lakh crore sort of an order book gives a fantastic visibility, and the way management has mitigated the operational efficiency in the company. I think I believe that going ahead, L&T can perform a lot better with better return ratios. So I would switch to L&T than having position RVN.
Okay, and Ashish, your view for RVNL, what should the viewer do? Hold, sell, average? What's the option now?
See, I would not recommend to average. If you look at RVNL, NHPC, and the other stocks that we talked about, Kalyan Jewellers, all of those on the charts looks very similar because all of these stocks have shown very steep decline to the extent of 40-50% from their all-time highs. So that clearly shows that there is an underperformance that we are seeing over here. As of now, RVNL has a very important stop loss, which is around 314. If that breaks, then there is more downside to be seen over here, and I'm not expecting much of an upside opportunity as of now. So better to be out from RVNL and switch something into an auto ancillary space, something like a C8 or stocks from the auto space, something like a Tata Motors, which can be a better bet. RVNL does not look to be performing in the near term as well.
Okay, so no for RVNL as of now. Don't look at averaging as well. Let's move on to the next query. We have Abhay Shankar who's writing to us from Gwalior. He's holding 1,967 shares of Gulf Oil India. This is at a price of 1,280. Asking whether he should hold or sell. Parthiv?
I think the automotive lubricant space, I think the going has been good in terms of gross margin expansion for these players. No doubt the volume growth hasn't picked up the way it should, and we are expecting, I think, post the festive season, I think that should also happen. More importantly, I think Gulf Oil's forte is more into the diesel engine oils, where they have almost 39% share, and in terms of the personal mobility, they are at around 20%. So I think they are reasonably well positioned, and what we like about this company is the valuations. I think at a 16 trail multiple and on a forward basis is quoted at around 12-13 times. I think it's not very expensive. Even on an EV EBITDA multiple, I think it's at 9.41. And they have consistently, I think, garnered more market share from its stronger peer like Castrol. So Gulf Oil Lubricant, I think, looks good for the long term.
Okay. And Ashish, your view on the technicals for Gulf Oil?
See, Gulf Oil has been consolidating with 1300 as the immediate hurdle on the upside, and the support for the stock has been 1120. It's forming a rectangular pattern, which is a consolidation. So overall undertone, I think, should give a positive breakout. Continue to hold down here. We can expect a target of around 1420, 1440, which is the previous swing high. And on the downside, maintain a stop loss of around 1138 levels.
Okay, keeping an eye out on those levels over there. But that was the last query for today, gentlemen. So Ashish as well as Parthiv, thank you so much for joining us on the show and helping our viewers answer and get those answers to the stock-related queries. And viewers, before we wind down, let's take a quick look at what the market is doing right now. 25,060 is what the Nifty is at, 0.6% of days gains. So some bit of a, downtick that we're seeing from the day's highest point for the Nifty 50. Nifty Bank, though, managing to hold on 0.9% of gain. So no worries on that front. Nifty Bank as well as Nifty IT, that's leading the charts. But with that, we're going to wind down this edition of Your Stocks on CNBC-TV18. Remember, you can always email us your queries as well, and we'll address them with our experts. Last set of trade is still left. Don't go anywhere. You have closing bell up next.